We have just had an 8 Sigma event occur with the shocking jobs figure today, but markets seem to want to defy this message. We're seeing Bitcoin reluctantly positive. We're seeing altcoins like Matic up almost 6%, Phantom continuing to move up 7%. What is going on? Because we're even seeing traditional markets hold out slightly green today, despite a jobs report figure which came in more than 5 times roughly away from the expectation. What is going on? If you've not watched the video from earlier today, make sure you go watch it. 517,000 new jobs created, indicating that the labor market is still very hot. If you take a look at this is the largest reading we've had since July, but more importantly, much higher than the 180,000 or so jobs expected on this reading. This is like a reading you would expect in a bull market with loads of jobs created, and this reminds markets that the labor market is hotter than expected, and it has some people shouting for Jerome Powell to act like Paul Volcker and just rip interest rates up with another 50 basis points at the next meeting to avoid what is going on, because inflation could become entrenched. Now, since I posted that video a couple of hours ago, I've sat and I've reflected and I found a few reasons why this could actually back up what Jerome Powell said. Remember, Jerome Powell 2 days ago came out very dovish. Look, the market's riding off the back of it because he came out and he used positive words to say the disinflation process has started. In fact, let's take a look. It says, I will say that it's gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. So the clue is in what he's showing here. He is happy to see inflation trend down, but the job market continue to show good figures. And this is maybe one of the reasons why the markets are not tumbling hugely right now. Because if he can keep inflation coming to the downside, and he can keep job figures high, such that people have their jobs, they've got money in their pockets, but inflation's still coming down, then that means he can navigate the soft landing that everybody was after. Now, this would be a huge shun in the face of all major economists who have been shouting from the rooftops that this is the most predicted recession of all time. Now, what if Jerome Powell was able to thread the eye of the needle and manage to avoid this recession with a soft landing? Now, the critical piece for him to be able to do this is something known as the wage price spiral. We've spoken about it before on this channel, and we have spoken about it with our course members. Ijaz.UK/member. If you want to join those, you can cancel at any time. And this is where you have this awkward effect. Remember, Jerome Powell has 2 mandates. He needs to keep inflation at his 2% target, and he needs to keep maximum employment. He's not in the business of keeping people out of jobs. Now, the only reason people are saying that he wants unemployment to go up slightly is because he's got to keep inflation down. He's got to avoid a recession, which would ultimately be worse off, right? So it's the necessary evil. But if he can avoid this wage price spiral, he could navigate that soft landing. Now, the wage price spiral is quite simple. In essence, when you're in an inflationary environment, that leads to higher prices of consumer goods. Everything becomes more expensive, of course. Now, what happens when everything becomes more expensive? You're going to demand higher wages. If you demand higher wages, that leads to higher labor costs for businesses. And guess what businesses do? Those with pricing power pass those on to consumers in the form of higher inflation. And you end up in a wage price spiral, which can drive you into something called stagflation, which is where the economy is grinding to a halt, slowing down, but inflation is still running through the roof. That is what Jerome Powell wants to avoid here at all costs. Now, if he's able, like we're seeing right now, CPI inflation, PCE inflation coming to the downside, but jobs market is still strong, he's not too concerned, right? And if we search the report here for wage price spiral, okay, there was a question that was put to him. This is a transcript from the conference, which we covered on Wednesday. There was a question put to him. Fed Vice Chair Brainard said recently she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that. Chairman Powell, I do. Yeah, I do. You don't see that yet. In fact, even if you keep going on, there's not much of it. It's more of a risk, but I think it's becoming less salient. Okay, they're glad that the inflation is coming down. So he was very much dismissive of this notion that there's a wage price spiral. In other words, if we want to look at it in the non-farm payrolls that came out today, let's look at the wage growth. Year-on-year wage growth came in bang on expectations at 4.4, not too bad, right? Sorry, just 0.1 higher, 4.3, but it still hurtled down from 4.8 to 4.4. It's a big fall down in the year-on-year wage growth. So that's coming down. If you take a look at the month-on-month, it's 0.3, which is exactly as expected, 0.3. Now, if you annualize that, the current run rate, the wages are growing at 3.6% per annum. Yes, that's higher than 2%, but remember, Jerome Powell follows something called FAIT, F-A-I-T, which is you just need to have a flexible average of 2%. It's not that you need 2% every time. Sometimes you have periods where it's 1.5%, you have 2.5%, 3%, and a 1%. As long as it averages around that 2% inflation, that's what the Fed's job is. Right, so 3.6 is not miles away and definitely shows that the reduction in the growth of wages is starting to take shape. So this is why markets could be looking at this going, hang on a second, this is an amazing opportunity where Jerome Powell could be pulling off the unthinkable. He could be maneuvering here a soft landing. So let's take a look at how market's responding. You've got Bitcoin here just trying to hold the day here positive. Now, just as I'm recording, up 0.2%, still in this ascending broadening wedge. Again, this is a continuation pattern. It can break both ways, but it's more likely to break to the upside and continue the pattern from which it entered in. So it's consolidating right now, trying to break through this stubborn level around that 24,000 level. But that's no surprise to us, right? If you bring up the VPVR, you know this is a tricky level, particularly if you come up to the weekly time frame, which is where you start to see that there is a bit of stubborn volume here. Let me just move me out of the way. There is some stubborn volume here around these levels. Once you clear this level here, things can shoot up a lot quicker here on the daily time frame for Bitcoin. Also worth noting is let's take a look at the EMA ribbon. Right, let's take a look at this EMA ribbon, and you can see here on the weekly, we are running into this resistance. Now, if we can clear this level on Bitcoin, that is going to set us up for a nice handsome move, but you've got to respect the fact that the bears do have their final stand here. Matic up 5% today, very impressive move here on Polygon Matic. And again, something we spoke about, layer 2 solutions, I think they're going to have a very big 2023. You can see Polygon Matic just chugging along, another 5% day, nice upward trend here. I mean, if you just look at it on the 2nd of January, this token is sitting at 75 cents, now at $1.20. And this is not a project you can say hasn't had a decent 2022. It did relative to other projects. It had a decent move. Phantom continuing its move. I mean, look at this chart on Phantom. Another green day. Where has it managed to pull out another 5.8% here on the day? Definitely has the momentum right now and it's not looking like it wants to stop anytime soon. I'm personally not chasing this right now. Short-term trades, of course, I've been taking a lot of trades here on Phantom. You guys can do some links in the description to BYBIT and BitGet. Those are the platforms I use to trade. But in terms of my long-term portfolio, I do need to see a pullback before I do any meaningful buying for my long-term bags. But again, I'm happy with the amount I've got, but obviously you always want to top up a little bit more. Outside of that, you've got something like Coty moving up 3.75%. Again, they had the kind of buy the rumor, sell the news event on the launch of Jed, and Shen will continue to keep an eye on this. It's consolidating around its EMA ribbon. Optimism, another one just rocketing, consolidated into its EMA ribbon. It said no thank you and it went straight back off. Very nice opportunity to buy the dip as you get close to the EMA ribbon, and then you see it ripping again to perform its next big move. So again, do not chase these green candles, guys. Let it come to you, buy from positional strengths. But layer 2 solutions, guys, I've made a video on it. Go watch the layer 2 solutions that I'm looking at throughout this year. One of them is Metis, up another 3% today, not too shabby. It's having some crazy wicks. There's a lot of trading volume going through on Metis. Look at the last couple of days. Look at the wicks. I mean, this candle here run up to 40 and had a low of 30. So it's moving, big shakes in a day. A lot of volatility, which gives you good opportunity to trade these intraday if you are a trader. Render calling off a little bit after 3 enormous days. I mean, it had 17% that day, 8%, and a 13% almost. So it's definitely having a little bit of a calling off today. Let's also take a look at wider markets, because obviously we want to keep an eye on this. And so far, you're seeing a very tricky Friday. It's been very flip-floppy. Every time I've refreshed this, it's kind of given me a different look here on the US markets. Currently, as we're speaking, down 0.8 on the Nasdaq. Not as bad as it was when initially the job figures came out. S&P 0.6 and the Dow Jones relatively flat on the day. Now, I think in hindsight, this may prove itself as a buy the dip opportunity, right? In terms of crypto, if we do get an overreaction, which it doesn't look like the crypto markets want to do, if it did fall, I'd be looking to buy the dip. Like I shared with you, for Bitcoin, I need to see a decent pullback for me to make any serious purchases here on the Bitcoin chart. I want to see it come down into its EMA ribbon. Back at that 22 kind of thousand range would be a nice level. If I bring out the horizontals so we can see them, this level would need to be where it needs to be, around this 22,000 for me to do any meaningful purchases Otherwise, I'm just not going to chase it. I've had plenty of time to accumulate. Now, if you're new to crypto, if you only just entered, that's a value judgment for you to decide, right? Where do you think Bitcoin's going to be? What's your conviction like? If you think this is a project which is going to go to 100,000 in terms of Bitcoin, then does it really matter if you're buying at 23, 22? If you've been in the market day to day like we have for many years and you've been watching it, you've been a bit spoiled, buying it at 15,500, it's going to be harder to buy it now that it's ran. Right? But it's all perspective, because the reality is if we think it's going to go to 100,000, we should have no concerns DCAing. So when the market's volatile, and I've always said from the start of this year, it's going to be volatile. It's going to be let's go, let's pause, let's go, let's pause, right? It's going to be kind of really jittery until at least Q2, in my opinion, towards the end of Q2. It's a great opportunity for me personally to be DCAing. Just smooth out any of the panic and just try to DCA as best I can. When the greed's there, try to DCA a little bit. When the fear comes back in, of course, on those pullbacks, I want to be DCAing as well. Let me know, what are you guys actively doing in this market? If you appreciate these types of updates, smash some likes. Don't forget to subscribe. Have an awesome weekend. Naturally, I will bring you an update, and I'll see you in the next one.